Welcome everyone to this webinar on the future of money. To begin, I'd like to start with a question to get the brain juices going. When was the last time that you actually used a $100 note? What about, say, a $50 or even a $20 note? I think for most of us, the days of coins and notes are something of a concept in the past. And if we look all around us, it seems that we are on the verge of a digital revolution. Now, looking around us, for a lot of us already, we are living in a largely cashless society. You may have done some shopping this week at Coles or Woolies and you paid for your groceries by tapping your card. You may have purchased something on eBay or Amazon by using a service like Afterpay, paying in the future. Or for those of you that are a little bit more tech savvy, maybe you've invested into Bitcoin or the 4,000 other potential cryptocurrencies available in the market. So if we look at where we currently are, it's not inconceivable to imagine a far more digital future when it comes to monetary transactions. Now, to understand where we might go, it's important to understand where we've been. And money is a concept that has had some incredible evolution throughout history. Whether we're going back to 3000 BC to ancient Mesopotamia, where individuals used clay tablets to trade amongst each other, whether we go to the ancient Aztecs who used cacao beans, seeds, and other commodities. And of course, throughout history, we've had a fascination with precious metals, most notably after the Second World War, where we had the introduction of a global gold standard. Fast forward to the 1970s, where we had the President Nixon shock, where Nixon came in and abolished the gold standard, entering us into an era that we now live in today, the idea of fiat currency. The fact that the money that I hold in my hand today has some value in and of itself, driven by my trust in the central bank and governing authorities. Of course, most of us have a piece of plastic that we use for most of our transactions. And nowadays, people can use their smartphones or even their digital watches in order to carry out those very same transactions. And perhaps the most exciting and interesting development recently is the idea of cryptocurrency. And it's not just cryptocurrency or the coins and the tokens themselves, but the infrastructure that supports cryptocurrencies that is proving to be very beneficial in multiple industries across society. Now, I think the pandemic has also shown us that household items like toilet paper can also take on a sort of monetary status. However, putting all jokes aside, I think it's important to appreciate that throughout history, money has evolved in some incredible ways, and its future is only really limited by our imagination and our receptiveness to adopting the emerging technologies that we see. So what could the future of money look like? In the limited time that I have today, I want to propose two different scenarios as to what the future could be. The first scenario is around monetary progression. The idea that we adopt, appreciate, and implement some of the emerging technologies that we have today on a wider scale. The other potential scenario is the idea of monetary regression, the idea that we regress back to what we're comfortable with, the idea that perhaps a fully digital world of money is a step too far into the unknowable. And if you know anything about basic probability theory, chances are over the long run, we'll end up with something that looks like it's in the middle. Now, in terms of monetary progression, I expect over the longer term that we'll see a far greater adoption of digital wallets. Now, many of us already use something like an Apple Wallet, but in countries like mainland China, where 4 out of every 5 transactions are already virtual through the use of Alipay or WeChat Pay, we've seen the government come in and introduce a fully digital yuan. So nowadays you can actually, if you're participating as part of the current experiment, you can have access to a digital wallet, digital currencies without ever having to worry about the paper format. I think in the future, we'll also see instantaneous government welfare. And what I mean by this is the idea that we can have stabilization mechanisms in the government set up to offset any exogenous shocks. So the pandemic has shown us that although mass amounts of fiscal stimulus are very effective, the time taken to actually roll out some of these fiscal measures was problematic. And nowadays there are multiple businesses still waiting for support and welfare. So if we move to a fully digital currency, say issued by the Reserve Bank of Australia, it's very likely that we could see a pass-through of fiscal policy into digital wallets instantaneously. We've also seen evidence that digital currencies are allowing us to overcome a lot of these black and opaque markets that we see. So, for instance, a fantastic researcher at Stanford Business School, Itai Ashgali, has come up with an algorithm based upon the blockchain system, the idea of a public ledger that's accessible and verifiable by all the participants in the market, to match kidney donors to those people who need kidney transplants. So using blockchain to come up with a more competitive, fairly priced market can allow us to get away from those darker markets, those black markets that really take advantage of the most vulnerable people in society. I think it's very likely that we'll see a greater degree of transparency. Now, this doesn't necessarily mean that all your personal information is going to be shared online with millions of people, but rather it's the idea that the flows of money into and out of the economic system can be tracked and they can be verified. So, for instance, when it comes to financial market facilitators, banks, dealer brokers, they can use blockchain technologies in order to understand the flows of money into and out of their balance sheet, being able to commit to stuff like liquidity management on a far more effective basis. So the future, if we do adopt a lot of these digital currencies, the infrastructure that supports the digital currencies, whether we're talking about decentralized currencies like Bitcoin, or whether we're talking about centralized currencies like a central bank currency that's issued digitally, the future is indeed very interesting. However, there are two sides to every coin, and we could equally see the scenario where we end up with the idea of monetary rejection. So a big problem with cryptocurrencies is for those individuals who want to invest in cryptocurrency who aren't as knowledgeable as, say, professional investors, they may gain a false sense of security. And this false sense of security is driven by the fact that it's not necessarily the coins or tokens that are vulnerable to hacking activities. It's not necessarily the blockchain technology, rather the exchange in which the cryptocurrency exchanges hands is vulnerable to hacking activities. And a great example is back in 2014, the hacking and collapse of Mt. Gox, which at the time was a Japan-based exchange handling about 70% of all Bitcoin transactions. Till this very day, it's very hard for these individuals to regain any of their funds. No one knows where the money is. And at the time, there was about 500 million US dollars worth of Bitcoin stolen. In today's value, that's several billion worth of currency stolen. There's also the fact that we continually see the use of mainly Bitcoin, but also cryptocurrencies generally for illegal activities. So it's estimated that 1 out of every 4 participants using Bitcoin is using it for an illegal activity. Now, on a monetary basis, in terms of transactional volumes, that's about 50% of all Bitcoin transactions. So it's a little bit scary to think that a lot of these decentralized currencies are being used for crime and funding these illegal activities. And a great example, of course, before the FBI shut it down, was the Silk Road, a website, a vendor available on the dark web, which allowed you to buy literally anything you can imagine using Bitcoin as payment. Now, one very sad factor, of course, is the idea of the environmental externalities that come with mining for Bitcoin or other cryptocurrencies that are based on a proof of work system or a blockchain that's based on proof of work. This just simply means that we need computing power to solve very elaborate algorithms to be able to be rewarded with some currency, whether it's a Bitcoin or another cryptocurrency. Now, the estimated usage of electricity to actually conduct Bitcoin mining on an annual global basis is estimated to be equivalent to the annual electricity usage of a country like Denmark or Sweden, which is absolutely incredible if you think about it, especially if most of the Bitcoin mining happens in, say, emerging markets where there's a heavy reliance on fossil fuels. There's also the lesser known fact that a lot of these Bitcoin mining operations also produce a lot of noise pollution. So the picture that you see in front of you at the bottom, that's actually a Bitcoin operation in the mountainous region of Sichuan in mainland China. Even though China has banned Bitcoin mining, it still happens in these remote regions, and it causes a lot of ecological damage. It causes a lot of the native ecology to die and to move away from that area. There's, of course, a lack of regulation, definitely at the global level. There's no global code of conduct. There's disagreement across countries as to what Bitcoin or what cryptocurrencies are. Are they an asset? Are they a means to simply trade, such as a traditional currency? So there's been a lot of disagreement. And right now, there's only one country in the world that permits you to use Bitcoin for everyday transactions, and that's El Salvador. And in fact, next month in September, they're going to roll out the very first use of Bitcoin for paying for groceries or for paying for a haircut. And finally, there's a large lack of privacy and control. Now, this is not to say that decentralized Bitcoin type currencies don't have any privacy, because they do have privacy and they give you control. What I mean is the digital central bank currencies may have a lack of privacy and control. Are we really at this stage where we are happy to give our personal monetary transaction details to a governing authority? And that's more of a philosophical debate. Now, when people look at Bitcoin as an investment, they often look at the astronomical price increase, say by looking at a chart. Now, in the financial markets certificate program that we teach here at Macquarie in collaboration with AFMA, we go beyond just looking at something like a price chart. So yes, had you purchased Bitcoin in 2014 and held your investment throughout time, chances are you would have made a pretty substantial capital gain. However, what a lot of retail and what a lot of newer investors typically dismiss is the sheer amount of volatility, right? The risk-adjusted returns of Bitcoin are very misleading. So if I told you that at any one point over a year, that your investment into Bitcoin could go up 20, 25%, or could equivalently fall 20, 25%, you might have a very different measure of risk appetite. We also, in the financial markets program, teach about the idea of a debt issuance, the issuance of a bond. And if anyone has ever worked on a debt transaction, you'll know that there's a plethora of parties involved. We have regulators and credit rating agencies. We've got sell-side analysts, the investment bank, the back office. A lot of information is on paper, and some of this information is just kept in the air as conversation. So what we're seeing is, especially among some of the major banks, is the adoption of blockchain technology, this idea of public ledger, to actually carry out the issuance of debt. So we may just see a streamlining of financial markets in the future. So in the future, we could see a company set up a blockchain. They'll insert the information about the debt issuance program into the blockchain as separate blocks. And the participants in the market, the investors, the regulators, anyone who wants to get involved, can join the blockchain, verify the blockchain, and in the end, the allocation of securities can be made into a digital portfolio. And for those of you thinking that this might seem a little bit too simplistic or far-fetched, JP Morgan has issued a US dollar private placement back in 2018 and then tapped the market again in 2019 using this very streamlined approach. So it's not too far away from us to be able to use such technology. Now, I'd just like to finalize with a few very interesting emerging ideas that have really sparked inspiration for me as to what the future could look like. Most people have probably heard about the idea of a universal basic income. It's not inconceivable to see a digital basic income in the future. And that simply means when we pay out a certain amount of welfare to the most vulnerable in society, we can pay that money out to a digital wallet whereby those funds are only allocated for the most basic and the most basic necessities of life. So we can actually make sure that this sort of money does not go into illegal activities. There's also the use of blockchain technology for public discourse. So one of the most contentious uses of potential blockchain technology is the idea around elections. If you kept a close eye on the US presidential elections, you would have known that voter fraud and allegation of voter fraud was quite a big ordeal. If we can use blockchain technology where everyone gets a coin they invest this coin into who they want to vote for, and the blockchain records all this information and it's verified by everyone participating, it could alleviate a lot of those problems, potentially. Now, finally, a lot of businesses are using blockchain technology for supply chain optimization. So, for instance, an organization can manage its inventory in real time. It can manage the carbon footprint of its goods that it produces from the point of origin to the point of delivery. And in terms of an example here in Australia, we've seen the Port of Brisbane implement some blockchain technology to manage the inflows and outflows of goods from overseas markets. So businesses are becoming more and more accepting and open-minded of these potential technologies. And I truly think that we'll see a wider spread adoption as they get cheaper, more accessible, and more implemented. So Suzanne, I'd love to throw back to you for any questions or comments that anyone might have.
Thanks very much, Hamid. We've got a number of questions coming through. Thank you for these. The first question that we have is, what are the risks of eliminating paper money completely?
So it's a very, very contentious idea to say to society that tomorrow you cannot go to an ATM and get paper money out of a machine. And I think the risk that you run there is that you'll always have a segment of society that will be left behind. The people that are potentially not technologically literate, people who truly struggle trying to understand what a digital currency is, how do I make sure this is not a scam? So one of the big problems is going to be the rollout, right? Let's say we move to a digital currency. Can we truly educate everyone and make them comfortable around the idea that no, you cannot go to an ATM anymore? If you open up the app on your phone, all your currency and all your investments are viewed on your smartphone device. So the rollout, I think, is going to be very problematic moving to a paper currency, moving away from a paper currency.
Thanks very much, Hamid. A question here from Amit. It's, will reserve currency's role change going forward? What is the future of the US dollar as the underlying currency that drives FX markets and trade?
So that's a fantastic question, because for a long time, since the Second World War, the US dollar has been the greenback. It's the prime currency that we fund and facilitate transactions based on. And I think the idea that we now have decentralized alternatives poses a very interesting question. Can the US dollar maintain its control into the future? Now, if you look at the portfolios of central banks, you can see that over time they've diversified into other reserve currencies, namely the introduction of something like the renminbi, the Chinese currency. So already over time, we've seen a lesser use of the US dollar, but it still dominates around 90% of all FX transactions. It's still the prime go-to currency. And when in 2011, the US economy was downgraded from AAA status to AA, everyone thought that this will lead to a huge shift into other currencies, but actually the US dollar has gained more and more usage over time. So I think it's a bit far-fetched to think that the US dollar will lose its prominence, but potentially a virtual version or a digital version of the US dollar, which is currently being experimented by the Boston Fed, could be the future.
Thanks very much, Hamid. So we've got a question here from Lurian. Recently, the US is providing incentives for Bitcoin miners to set up shop next to oil and gas wells by providing cheap energy. While we criticise China for CO2 emissions, should a global leader like the US participate in such activities? Good question.
I think there's always going to be a double standard. Nations will say to themselves, well, we can't allow this sort of activity to occur because it eats up and uses so much energy, which is based on fossil fuels. But at the same time, if a nation, and particularly an advanced economy, is not going to participate in the future of digital currency, they're going to be left behind if other nations progress and roll out their own versions of a digital currency. So look, it's a very, very difficult debate around whether or not we should be using this amount of electricity, this amount of energy based on fossil fuels to mine Bitcoin. But there are alternatives, right? We don't always have to use a blockchain based upon a proof of work system. We can use a proof of stake system, which is a completely different blockchain, which is not as energy intensive as the traditional blockchains. So there are a number of cryptocurrencies nowadays that are getting themselves away from mass amounts of electricity consumption.
Thanks very much. So Hamid, do you have any insights into how El Salvador is faring with using Bitcoin fully as a money of exchange? And that question is from Eric.
Thanks for the question, Eric. So from what I've read, El Salvador is going to roll it out early next month, the use of Bitcoin for transactions alongside their existing currency. And the idea will be if you go and get a haircut or go to the grocery, alongside where you can tap your card, you can also pay using Bitcoin. There are also Bitcoin ATMs set up where you can actually log in using your digital wallet and you can exchange into US dollar or any other currency that's available. So I think it's going to prove to be a fantastic natural experiment to see if people actually adopt this in El Salvador, because one could argue from the economist point of view that there are still a lot of economic problems. This is an emerging market. There's not a lot of regulatory overlay. There is quite a lot of corruption in that country. So whether we are actually able to transition and smoothly use something like Bitcoin remains to be seen. But it is an interesting natural experiment.
Thank you so much. Another question here from Mark. If participants are looking to decentralize currencies away from intermediaries, why do so many participants hold their cryptocurrencies in exchanges which are effectively intermediaries?
I think because there's a lack of a better alternative right now. The exchanges that have popped up have made immense amounts of money by facilitating the trading of cryptocurrency. Until there's a fully decentralized exchange, one that is unhackable, that is not hackable, it's going to be very difficult to get ourselves away. But you have to remember that these exchanges are set up by individuals who have done a lot of research, who've invested a lot of time in understanding cryptocurrency. So it's not like you're trading on the ASX or the New York Stock Exchange to buy your cryptocurrencies. These are to a certain extent decentralized exchanges, and you can't just log in and purchase them off the exchange without verifying who you are, what your intentions are, setting up the wallet. So right now, it's a lack of alternatives. There have been some experiments around, can we transition away from an exchange sitting in the middle? Can we just have the transfer of cryptocurrency between individuals? But those are largely experimental approaches. Right now, we really rely on exchanges because that allows for the price mechanism. It allows for an actual price to be labeled for Bitcoin.
Okay. We've got so many questions here. I'm not sure we're going to be able to cover all of them, but we're doing our best. Another question here from Giles. Do you need a digital currency or coin to adopt a blockchain environment for a stated purpose? That is, can you operate or participate in a blockchain without a digital coin?
So that's interesting. There's been a few variations of the blockchain that don't actually need a token or a coin. Some of these blockchains permit, for instance, the signing of a contract. So we have nowadays something called a smart contract where you can set up the blockchain, the contract is input into the blockchain, someone makes a change or signs the contract, and the blockchain is updated. So when it comes to the monetary side of things, well, of course, the whole basis of a cryptocurrency is the idea of the coin itself, but the blockchain technology as a standalone idea is proving to be very, very applicable to vast amounts of areas in society in different industries. So if I just go back to my example that I was discussing around supply chain optimization, the blockchain doesn't need a cryptocurrency per se to get it going. We can set up a blockchain that records information real time between the parties that are transferring or bringing in goods between each other. So it's not necessarily, it's very important not to get caught up with the idea of cryptocurrency equals blockchain. They are separate technologies that complement each other, but I think it's the blockchain that really has the greatest applicability in the future.
We've got some great questions here from Sean. One of them is, do you agree that we do not need a central bank digital currency because all Australians have the facility of a government guaranteed MyGov account that citizens can operate by their smartphones and a fee-free government issued debit card to remove the need to possess a bank account? Thanks, Sean.
So it's very interesting that when people think and look out into the future that this idea of a digital currency is far-fetched, where if you look right now, I have it, for instance, on my smartphone, I've got a digital Medicare, I've got a digital driver's license, I check in digitally everywhere that I go for the COVID pandemic. So already we're based in a very virtual world when it comes to monetary transactions in general. So I think there are quite a lot of startups, interestingly, here in Australia that are playing the role of the digital currency provider away from the central bank. But I think governing authorities want to maintain control over the money supply. I think governing authorities like the central bank, the Treasury, it's their job to make sure that the Australian dollar at the end of the day has some value. And if we leave it to the work of others to verify and support that value, it might be devastating. So I think eventually in the future, we're going to realize that it's the central bank, because of the faith and trust that we place in it. The legally mandated Banking Act of 1959 is what gives the central bank its trust, as opposed to getting digital currency supplied from an external third party. So I think that psychological point of view and the legality still support digital currencies from the central bank.
Okay, our last question is just running out of time here. Millicent is asking, with the regulatory focus on risk management, what are your thoughts on regulation of global stablecoin governing bodies?
So there have been a few attempts to set up a global oversight of cryptocurrency. And at the central banks, they've set up committees and they've written papers around how do we regulate this stuff, right? And the question really comes down to, do we want to make this a decentralized currency, or do we want to take complete control over it and just make it into a digital version of what we have? So the governance and regulatory question is a very difficult one. And because of the disagreements that we see right now between various countries that either have adopted Bitcoin and other cryptocurrencies and those that have outright banned them, it's very hard to have a global code, right? This is not the global code for FX that we teach in the financial markets program. This is a very different beast that we're dealing with. There is a lot of disagreement and there's a lot of misunderstanding as to what Bitcoin and cryptocurrencies really are fundamentally. We can argue that it's an asset or an investment or a traditional currency. There are multiple views, and until there's consensus, you're not going to see a movement forward towards a truly global regulatory framework.
And our last question, it's actually a bit of a mix from a few people. There's Amit and Matt and Giles are all asking very similar questions, as well as Benjamin, just around AML and how that ties into this, and also the very fact that El Salvador is a country with the largest trade in illegal drugs, and how do we actually, mitigate the risks of the oversight of trade in weapons and drugs, and, what should we worry about with regard to consumer risk?
That's a great finalizing question, because it really brings forward the view that although these cryptocurrencies are decentralized, they're anonymous, they are being used for illegal activities. And one of my colleagues here in the Department of Applied Finance a couple of years ago wrote a great paper on the drug trade using Bitcoin. And the estimates range around the entire size of the US and European drug trade being facilitated daily in terms of the trade of Bitcoin. So around anti-money laundering, terrorist financing, I think that's something that has got the regulators really afraid, because ever since the inception of Bitcoin trading in 2009, money has gone into the hands of those it shouldn't have. So that is why I think central banks and governing authorities are pushing back and saying, look, we can provide a lot of the same technologies and benefits. However, we can eliminate a lot of the usage of these digital currencies for illegal activities. Now, even if you completely eliminate a digital currency, people are going to be on the street tomorrow with US dollars funding the drug trade, the illegal arms trade. It's been going on as long as man has been on Earth. So are you going to completely eliminate illegal activities? No. Can you get to a system that helps facilitate a better use of digital currencies away from these illegal activities? I think so. But what do you pay in return? Well, you pay the loss of decentralization. You go towards more of a centralized currency. So you give up that sense of anonymity.
Okay, thanks very much, Hamid. Now, obviously, there are lots of questions today, and if you wanted to learn more about what Hamid actually teaches in the Financial Markets Certificate, I'd like to hand over to Lindsay Bryan to discuss that more.
Thanks for the presentation today. It was a great discussion about the trajectory of money and financial markets. Financial markets have been a critical enabler for the development of economies over a very long time, and changing technology has dramatically changed the way markets function. Our Financial Markets Certificate, endorsed by AFMA, is designed to help financial markets professionals and those wanting to work in financial markets an opportunity to learn more about those markets and the vital role that they play, and how new technologies can fit into the picture. So completing the Financial Market Certificate provides pathways to further postgraduate study, such as the Master of Applied Finance. And if we move the slide on to the next page, I can say that if you're looking To find out more, please visit that website that is shown there or contact us on the email address displayed, and we can take you through how the course works. Once again, thank you, everyone, and back to you, Suzanne.
Thank you very much. Thank you for an insightful presentation from Hamid. Thank you very much. Thank you, Lindsay. Thank you to all of you for your amazing questions that you sent to us. And I'm sorry that we didn't get a time to answer everybody's questions, but of course, if you want to see more, maybe watch the recording of this webinar, you can find it on that page there, mq.edu.au/business/credentialed programs, or just do a Google search on Macquarie Business School credentialed programs and you'll find us, or the financial market certificate. Thanks very much for joining us today. Hope you have a great day. Stay safe.